Hello and welcome to The Loop, where we untangle today's business issues by throwing real-life scenarios at a panel of experts and ask them to deliver practical advice on how to tackle current business issues. In this episode, we're discussing private equity. Now, businesses across the UK have been through a difficult time of late, and some have been considering their future and what decisions they can make now that will set them up for success. For some, that decision could be a private equity investment. But private equity has had some bad press lately. So why should you consider a private equity investment? Well, here to help us answer that question, we have Charlie Jolly, Head of Private Equity at RSM UK, Kirsty MacDonald, Partner at Growth Capital Partners, and Hamish Floyd, the Chief Financial Officer at Cloudsense. Thank you all for joining and welcome to The Loop.
Thank you.
Thank you.
Well, it's great to have you here. Before we jump into the discussion, it'd be good to know a little bit more about each of you and perhaps a short introduction to your roles and your relationship with private equity. Charlie, I'm going to come to you first. It's great to have you back on the program again. Talk to me a little bit about your role.
So at RSM, we provide a wide range of services to private equity firms and also to the companies that they invest in. Helping the companies execute usually what's quite an ambitious business plan. And my role in particular involves spending a lot of time with private equity firms, understanding the sorts of investments they're looking to make, the sorts of companies they're looking to back, the types of management teams and the sectors that they've worked in before. So really trying to understand the market and make sure that we are introducing our clients to the right sorts of private equity firms that can help them maximize their opportunities.
Thanks, Charlie. And Kirsty, welcome to The Loop. It'd be great to just hear a little bit more from you.
Yeah, thanks, Jon, and thank you very much for inviting me to take part today. I guess if I start with a short personal introduction, as Jon said, I'm Kirsty MacDonald, partner at Growth Capital Partners, or GCP. Part of my background will be obvious already from my accent. I come from the west coast of Scotland. Part of my background that will be less obvious is that I'm also an engineer by training. But I went quickly into the business world on graduating. I was part of the founding team of a strategy consulting firm, and then I moved on to that investing side about 17 years ago. I worked for a corporate for a couple of years, 5 years in a large private equity firm, and I've been at GCP for 10 years now, the last 8 of those as a partner.
Well, it's great to have you on the program, Kirsty. And you're our voice of private equity on the show.
Yeah, I'm slightly terrified as being described as one of the panel of experts, but I can certainly provide a private equity perspective to the discussion.
Well, thank you. We're looking forward to hearing your expertise as well. Hamish, I'll come to you as well now. It'd be good to find out more about your role and about the business as well.
I'm CFO at Cloudsense, so Chief Financial Officer. So obviously I head up the finance part of the business. But also HR and legal.
Got your hands full there, then.
Yeah, absolutely. Yeah. My role is obviously the operational side of that, but also really one of the key parts of the investor relations. So I provide a lens for the private equity firm in terms of through the lens of numbers. Clearly, they're very numerate and number driven, rightly so, and I provide that information on a very regular basis to them, and it helps. Obviously, it's a sort of a data-driven conversation between the CFO, the CEO, and also the investors. So that's my primary role.
And if I understand rightly as well, Hamish, Cloudsense is itself a PE-backed company. Is that correct?
That's right. Absolutely. Yes. So our current investors purchased from founders back in 2017.
Okay, Charlie, just taking a step back for a second, talk us through in layman's terms what you see private equity essentially as being.
So private equity firms invest minority or majority stakes in private companies, and with the view to help provide the capital so that business can grow over a period of usually 3 to 5 years. And at the end of that period, they and the management team sell their stake either to another private equity firm, to a trade buyer, or in a float. So either to the public market. And the role of the private equity firm is to provide a return over that period to their investors, which tend to be pension funds or insurance companies, that is better than the return the investors could have got if they invested in the public markets. So their job is to outperform public markets, and they do that by investing in small private companies and helping them grow.
Well, it's great to have all three of you in the studio for this edition of The Loop. We're here essentially to help middle market businesses untangle some of today's biggest business issues. And we do this via the Loop Challenge. I'm going to talk you through 2 real life business scenarios. And we'd like you each to consider what practical advice you would give that business in a situation. Of course, the focus is on that relationship with private equity investment. So that's the Loop Challenge. Before we jump in, though, do you accept the Loop Challenge?
Yes, absolutely.
We do.
I accept.
Well, I'm very pleased because, as we've said before, if you don't, we don't have a program. Let's jump into that first scenario and start thinking about the story that we've got here. So imagine you're the stakeholder in a private equity backed business, and the business is executing an ambitious growth plan. The past 5 years have seen steady progress, and it's been a successful overall relationship that you've had with your PE backer. But then crisis hits in March 2020 in the form of the global pandemic, and your growth plan, well, frankly, goes out of the window. Your top priority is to stabilize and reset the business and make it resilient for the future. So, Hamish, I'm going to come to you first. What would you be thinking about in this situation, in your position?
Cash. That was the first thing that we were concerned about. Now, it was broadly business as usual, actually, in terms of we run lean. We operate a very tight cash process, but we went even tighter. We're having daily meetings around cash collections, etc. Our fear was that people would just simply stop paying. Now, we were lucky in that our customers are resilient, and we have renewals that are collected annually each year. So that's certainly made it a lot easier. And as I say, the sectors that we serve were okay. But we did a lot of stress testing, a lot of what if planning, and we scared ourselves silly, and looked at various outcomes. About 4 different outcomes of where we might end up. In terms of the investor relationship, they were great. I think they all recognised that this was unparalleled territory. And so they were very supportive, and they gave us some good advice as well. And I think also that if we had been owner run and we would have felt more exposed. You've got some guys who are in the private equity business who are well versed in raising capital when it's needed. So we felt they got our back.
Yeah. So cash is king, definitely there, and communication as well. Kirsty, what about your thoughts on that? Your perspective, perhaps more from certainly from the PE side.
Yeah, in terms of how we came to deal with the COVID crisis, the approach was very much in line with our approach at any other time in that investment relationship. It is that one of partnership. And what does that mean for us? It means about being, I think, thoughtful and flexible. It means being balanced and pragmatic. So particularly when you're faced with some of those terrifying scenarios that Hamish has mentioned. And it's about having trust. It's about being focused on the people, the culture, and putting that at the heart of our behaviour. And I think the other thing was the culture within our own firm was very consistent throughout. So what the management teams were having to deal with from GCP was the same as it had always been. So, we invest in a very small number of businesses. The deals really matter. We all invest personally in every business. So from an intellectual, financial, professional, personal perspective, we want the absolute best for these businesses. So I hope what they got from GCP was, a team that were hardworking, committed, absolutely engaged, but senior and experienced at the same time, so that we didn't get distracted or interfere needlessly, really.
And Charlie, you must have, I dare say, witnessed a scenario very like this in real life for your role at RSM. What are your thoughts?
Yeah, so we felt that it was that really the COVID crisis was the acid test for the board, investor and management team relationship. So we ran a survey of private equity backed businesses, and we surveyed about 70 and asked them a number of questions about how the pandemic had affected and how the PE firm had supported or not in the intervening period. And we got some very heartening and broadly very positive feedback. The vast majority of companies that we surveyed had been negatively impacted. 100% had been disrupted enormously. But that same majority were also very positive on the support they'd received from their private equity firm. And that majority also felt that having a PE backer had made them more resilient at that period. So it was really heartening, particularly at a time when a lot of people were very worried, quite rightly, about the prospects for their businesses.
So just picking up on that a little bit more, Kirsty, where do you think private equity can really make a difference in this situation?
Yeah, and John, if I can give you a bit of context first, actually, because, one of the great privileges of our role, our job, if you can call it that, is that we work with outstanding businesses and really remarkable people who have already been extremely successful, quite frankly, without any help from us. So, I hope our team has the humility to respect that and understand that. So we make a very conscious decision not to get involved in an operational day-to-day executive role, so that there's definitely a line there. So where can we help? I think it's in two areas. One is about focus and priorities. We have experience of being on that value creation journey with private equity time and time again. So getting straight on where are we all trying to get to together? What are the focus areas, and therefore what are the priorities in the short, medium and long term? And I think that was extremely important through COVID as well, to keep our eye on that. And then the second thing is, we do have complementary experience and a network which can help. So whether that's in the again, to Hamish's point around forecasting and planning, whether it's about keeping an eye on financing options, some of the COVID support schemes supplied by the government. We have a network in our own portfolio, the businesses that we're invested in, who are facing the same challenges all the time. I think everybody was negotiating with HMRC on the same day at one point, and being able to talk to each other was massively powerful at that stage.
Now, this is interesting because there's a scale here, isn't there? If you're a private equity investor, you've got investments in a number of businesses potentially, and I guess you're seeing how each of those are faring in their individual experiences as a collective knowledge that you can draw from that. Is that something that particularly is useful in this situation, do you think?
Yeah, absolutely. And, we made an effort to connect it is actually usually the CFO on a number of different areas to make sure they were all talking together, that we were recognising the areas of commonality, because even though it's quite different sectors that we invest in, often there are common challenges, particularly through a point like COVID. So, yeah.
No, that's very interesting. And Hamish, from your perspective, back to the CFO, where did you feel, in addition to the cash point that you raised, where did you feel the most benefit in terms of that relationship with the private equity backer?
Well, actually, what Kirsty said resonates, because like her firm, our private equity backers also brought all the CFO portfolio CFOs together and went through a sort of bit of a checklist of all of the areas we should hit in terms of talking to the local tax jurisdictions. And from my perspective, we don't have a big footprint in the US in terms of advice, and so we leveraged that, and that was very helpful. We got some good benefit back from that.
And that's a consistent theme I'm hearing, I think, from all of you, the importance of communication, lines of communication within the business and between that business and the private equity backer as well. From your perspective at RSM, Charlie, do you see that as essential, that if the communication breaks down, well, of course, there may be other difficulties that will come from that?
Yeah, certainly. And I think it works best where open communication is established up front, and quite often through even through the deal process. And it's not necessarily around the actual information itself, which is really important, because PE firms are not generally operational owners. So the only way they can learn about the business is through being provided information by the company. So there's a big information requirement on a company when it's PE backed anyway. But it certainly around the willingness to share as much information as possible, and the willingness and keenness to build a really comprehensive view of the business, how it's trading for a third party, and where there is that willingness, it works very well, and both teams work to make sure that information flows, and where it does flow, the business is then in a much better place to make bold decisions, and as a result, it normally does a lot better. So it's more about the willingness and the approach and the attitude, really.
I also wanted just to add to something that Charlie was saying about bold decisions through the pandemic, because obviously the priorities in the early days were about well-being of our staff. It was about cash and profits. It was then about looking after stakeholders. But we've also seen a number of the businesses that we work with take those bold decisions, particularly around technology, around ESG issues, to really build back significantly better. On average, our portfolio is already about 20% ahead on revenue than it was pre-pandemic, about 33% ahead on profitability. Gearing is down. So the performance metrics prove out that, they're really in great shape, having hopefully come through it now.
Just to summarise then, perhaps, on some of the thoughts that you've raised on this scenario, it strikes me that, as we said before, communication is essential here, and a strong degree of trust and maybe a degree of pragmatism as well between all sides. The support that your PE backer can provide, especially in a strained situation like the one we've just been through in our scenario here, really can be very beneficial. Do you think that would be a fair way of describing or summarising perhaps what we've just been discussing now?
Yes. Yeah, absolutely.
Well, we're going to jump on to our second scenario. So thank you for helping with our first. So we'll move on to our second loop challenge. Now, imagine you're the major shareholder of your family business and you've experienced very positive growth, very positive success. Over the past few years, you've been considering your own future and the possibility of selling the business. Private equity firms get in touch with you a lot to discuss PE deals, but you've never really considered them seriously. Well, not until now. So, Charlie, I'm going to come to you first here. What would you advise in this situation? What would your take be if you were talking to the particular shareholder that we're thinking of here?
Certainly, I think a business owner of a middle market business in the UK, if they're looking to sell their business, they should consider private equity. I ought to sort of confess a bias there as RSM's UK head of private equity. That's pretty obvious.
You're talking your book, and very well.
Exactly, but I think there are some reasons why private equity should be becoming more attractive to people in that position. One is that the private equity market's been very successful over a long period of time, and they've raised a lot of capital at the moment. That has enabled them to compete with trade buyers, which is in most situations the other option. And so you should consider it because you might get the same price. And if price is a very important thing to a selling shareholder, then they can be they're more often than not competitive at that level. The other is that with the growth of the private equity market, there have been firms have specialized in various different areas, and today there is almost a private equity fund for every situation, whether that's turnaround, whether it's high growth, whether it's scaling across Europe, growing into the States. There are firms that specialize in these various things, and including firms that will cope with a high degree of management change. So if you're selling your business because you want to leave and you want to stop and you want to retire, again, that's not a reason not to speak to private equity too.
And Kirsty, as our private equity voice in the room here, what would you say are the motivations for the PE firm?
I guess from a personal perspective, we're looking for the situations, the partnerships, the businesses that we get involved in to continue being such a great success. Personally, I would love to look back and see that continue through my career. It would also be naive not to acknowledge that we are judged on our financial metrics, though, and the fund performance is absolutely central to our motivations and to our continued success. But I guess we believe that you can still generate top returns with a long-term, fair and holistic approach, because it's those kind of partnership characteristics that mean we can be invited into these amazing businesses in the first place.
I've got to put it to you, Kirsty, why do you think PE firms get a bit of a bad press? Is it because the media just doesn't really understand them, or is it because of actions that have been taken by a few businesses? But there does seem to be that element that some people have, not all. Why do you think that might be? Or is it a misconception?
Oh, listen, I think in the early days of private equity, long before my time, I hasten to add the reputation of tax avoiding, asset stripping, pinstripe suit wearing, kind of long lunch taking private equity executives was sort of sexy and appealing in the media, and so that has got picked up. But I think the reality of it now, the market has matured. It's become very sophisticated, and like Charlie, I mean, I would have to say this as the private equity representative in the room, I think it's a really, really great option for business owners going forward.
And Hamish, that's an exciting prospect, isn't it? If you're this family business, maybe you're the CFO in a family business here, you bring in that private equity expertise, the pace, the scale, the knowledge, and the opportunity to grow the business exponentially as well. Is that a motivating factor, do you think, from the business's perspective?
Absolutely, yeah. I mean, and I think what you're touching on there is an alignment of objectives. So when the deal is done, ensuring that the management team or the remaining founders, owners who work within the business have the same objective and the same or similar rewards at the end of it, then I think that makes for a good positive relationship.
And your own experience, Hamish, how have you found that, your experience versus the perception, of the idea of somebody else coming in and having a say in your cherished business? That can be a difficult thing to overcome.
It can, but I think as long as you're clear on their intentions, and it comes back to those aligned objectives, i.e., you all want to, double, triple your money, then I don't think there's any doubt as to the intentions. What I will say though is that I have seen it where those objectives are not aligned, and that is a recipe for disaster, and it does lead to not a particularly good board management relationship. So I think that's pretty clear, and I think most these days, most PE firms are cultured enough to realise that.
And we've challenged the position of the private equity investor here, but what about the firm? What entrenched views have you seen on that side that maybe need to change to recognise the potential value of PE investment?
Yeah, that's something we see quite a lot from companies that have, and from management teams that haven't had much experience of private equity, but read the papers. And I think it's going back to that perception. I think the mainstream media, picks up on a story. And if you think of middle market private equity, by and large, transactions go quite well. And didn't that go quite well? It's not a great article. It's not a great header. And so when a large deal goes wrong, that's a story. And those tend to be the stories that get picked up on. And as a result, business leaders sometimes, that can be all they know about the industry. So we do spend a lot of time just educating and also, being open, meeting people, making introductions, and sort of demonstrating that much of the PE market are just very human, decent people to deal with, and it's not as opaque as you might think. It's quite an accessible industry in the end.
And Kirsty, just a final quick question on this to you. Has the pandemic left you more or less bullish about deal making as you look forward? Where do you sit now?
I'm not sure if it's more or less bullish, but it's definitely bullish. We continue to see great opportunities, great businesses with opportunities to continue growing. We've actually continued to do deals through the pandemic. We've completed 4 new investments since last June. And, we think the COVID period, if we try to find some silver linings, there are definitely opportunities that have arisen because of that. And actually, business owners having a period to reflect and think about maybe they would de-risk. There are advantages to bringing on board a partner as well, that this could be a good time to do that kind of private equity transaction.
So I think we're certainly, with regard to our family business, thinking about PE backing would be suggesting that they take it seriously, have a proper conversation, communication again, but the option to consider PE backing is certainly one it should be considering. It's been great speaking to you all on both of these different challenges. We'd like to finish up, though, with a top tip from each of you as well. So, what piece of advice would you give to a middle market business thinking about getting involved with private equity investment. Kirsty, I'm going to come to you first. It's a fairly binary thing. I mean, you can maybe give us a couple of different answers, but what single thing would you say to a business that's thinking about this?
Yeah, my point goes back to Charlie's point actually about the specialism that's developed in the market. As private equity has matured, it's become hugely varied, the firms, the strategies, the style, the culture, and that's great for business owners, but it's also massively complex, coupled with it being a massive decision for the business owner themselves to take. So my advice would be to take advice. And I would say that even if Charlie wasn't sitting here in the room, but take that advice. Take your time and take references with the people that a private equity firm has worked with before.
Kirsty, thank you. And Hamish, your single piece of advice, the CFO's hat on.
I can let you indulge me with two.
Yeah, please do.
It'll be actually a build on what Kirsty and Charlie have said. So I think really do your homework. They are all different. And, if you're an owner manager who is set on growth and then you do a deal with a private equity house who does turnarounds and cost cutting, you ain't going to get along. So, that's obvious. But so know what the thesis is, what their investment thesis is, really understand it. I think the other one is do be prepared to invest a lot of time in the relationship with the board. You do need to provide visibility. It is a change from if you're an owner manager, you haven't had a boss. You've had some VC people who have dropped in every now and again, but this is different, and so you do need to invest time in that. And I think if you do that well, then you will start be a start of a good relationship, and for that you do need a good finance function for one thing.
Hamish, thank you very much. And Charlie, I'll leave the last word to you. Your tip for PE involvement.
Mine would be around information, because I think if you are going to engage with a private equity firm, fairly soon you're going to be needing to give them a lot of visibility of the business. They're bright people and they'll pick up how the business works and operates very quickly, but they won't be able to understand your business as quickly as your biggest competitor, and as a result, they'll ask a lot of questions. And so once if you get to the point where you've decided we are going to engage with private equity, I'm going to think about it, be aware that there is a big demand on information and the preparation. As with making any large business decision, preparation is really important, and the preparation to engage with private equity does require pulling together a lot of information. And if you can do that and do it well, then the whole process goes really, really smoothly.
Well, it's been an absolutely fascinating discussion. I feel I've learned a lot about private equity just listening to the three of you on this discussion. But unfortunately, we're out of time. But thank you all very much. Kirsty, Hamish, Charlie, thank you very much indeed. And if you want to find out more about private equity, then please do get in touch with Charlie or a member of the PE team at RSM UK. You can visit our website too. That's rsmuk.com. We're always keen to hear your views, so please do rate us and leave a review. And to stay in the loop, please subscribe to The Loop and listen to our next episode where we'll untangle more of today's big business issues.